Microsoft and Toyota have announced a partnership to develop in-car electronic systems. The amount may not be significant. It's just about $12 million, but it could be a sign of a new strategy at Microsoft. For more, we are joined this morning from Pittsburgh by Fort Pitt Capital Group investment analyst Kim Caughey-Forrest. Kim, great to see you again. I know you were on the call yesterday between Microsoft and Toyota announcing this. What struck out at you in this call?
Well, it is an exciting joint venture for both of the companies, but I think it kind of lays out where Microsoft is going with Azure and their definition of the cloud. Near the end of the call, Steve Ballmer said something about a lot of machine-to-machine chatter that they think is going to start happening. So that would entail things like the smart grid, devices in your home, talking on the internet, sending out signals. And I think they want to be an aggregator of all that data and then be able to do some data mining to help us be more efficient. And that is very, very interesting to me for Microsoft to be able to do that.
How different is that for them?
I think it's very different. We think of Microsoft as being an operating system company and an application company, but they're really trying to move into the cloud. They're certainly going to use their own software to enable this, but now they're moving into services and more in the end data analyzing kind of business. So, I think they can do it. They certainly have the platform. They have a lot of servers around the world that they can use, and this is a very interesting development for them.
And who does this pit them against?
Well, two candidates come to mind. One is IBM, that's been trying to do this with their Smart Planet initiative. They've been tackling it more on a smaller sort of platform, let's say for cities or states, gathering data and then feeding it back to the government for things like traffic control. So this is a much broader spectrum that Microsoft is going after, and that really does fit what their MO is about. They want a little bit of money from as many people as they can get, and that's what this sounds like it could be. Okay,
and it sounds like it's a higher margin business for them too, right?
Sure, absolutely. Okay. They have the servers. It's not like they have to build server farms.
And Kim, let me just switch gears for a moment to a competitor of Microsoft, which is Google. And the news out, I open up the Wall Street Journal and there's a front page news story about this idea of YouTube getting into, essentially becoming a broadcaster, right? They're going to start these original content channels. Is Google, they paid, what, $1.6 billion for YouTube. Is this the way to get their money back on this investment?
I think so. It's everybody's fighting for the living room right now, and companies that the cable companies have been thought they were dead for a long time. They kind of languished, and we've seen that not happen. But everybody still wants to be the content provider to your living room. Netflix wants that, and now that we have this proliferation of devices, it's not just about the living room. So this is an extremely interesting concept for them to go into creating new content. And I really like the channel idea. I have to tell you, I go on YouTube sometimes. Maybe it's because I'm of a certain age, but I'm just overwhelmed with how do you, sift through the good and the bad. The kitty on the fan, being flung around, very entertaining, but only for a very short period of time.
It's
we need
perfect
real
for people
content.
with ADD, yeah, but it's
exactly.
not.
Exactly.
But I'm with you. I mean, it's hard to sort through all of that, and maybe having channels would be a good way to sort of filter through some of the videos. Kim, I'm going to have to leave it there. Thank you very much. Great to talk with you as always.